Hello, dear ladies and gentlemen. My name is Americ Serra. I'm a crypto trader funded by GreenGo Capital, and I'm here today to explain you what is happening currently in the markets, right? So let's dive right into it. So first of all, 7 in the morning of UTC plus one time, we had German industrial production for a month-on-month basis, and it came out worse than expected, and the expected data was worse than previous data. So guys, this was really bearish for the DAX, right, and also for the euro. So we're seeing currently right now euro dollar falling. All right, I'm just gonna put here the chart just so you can see, right? So here we have the chart of euro dollar, and we're seeing that the euro dollar is getting hit pretty hard, right? But we have this support right here, and we have this range that we're seeing at that we might see some liquidity grabbing right here, then pull to the upside, then also coming back to this support zone, trying to test it again, once again breaking to the upside, and then falling in the next week, right? So if we get this consolidation right here, this is a really bearish consolidation mode, right? And this would make us see the XY pumping to the upside, and this would also make the risk on asset markets kind of fall. If the DXY is going up, the S&P, Nasdaq, and also Bitcoin are going down, right? Second thing that is really important right here is the consumer expectation survey results that came out today as well, and they're basically telling us, okay, guys, consumers are expecting that inflation is not going to be at 9% next year. So they're actually expecting that inflation is going to come down because of the hawkish view of the European Central Bank and also Fed and other central banks all around the world. So these consumers are basically saying, okay, guys, we're ready to deploy some money, but not a lot, because we expect actually inflation to come down. So we actually want to buy those same goods at a lower price. So this may fuel a faster rate of reduced inflation for the next couple of months, right? This is basically what the markets are pricing in. This is what big investors are pricing in. And this is why we're actually not seeing the price have a huge dump, especially on DAX and especially on the risk on asset markets, right? After that, we can see here that we have the most important data for today, which is the US non-farm payrolls and also the US unemployment rate, and last but not least, US private payrolls. So these three data points that we're going to see today, they are going to tell us something, especially the US non-farm payrolls and the US private payrolls, right? So if the US non-farm payrolls, they come lower than expected, which is already lower than the previous month, then guys, we're gonna have a huge pump to the upside in the markets, right? Because if less people are employed, or if less people are getting money on their hands, there's less money to be spent on goods and services. And if there's less money to be spent on goods and services, and the supply side is constrained, but we're also seeing the supply side of the money aggregate going down, which means that there's less money available for people to spend on goods and services because of the monetary policy of the central banks around the world. It means that inflation is also going to come down relatively faster than what was previously expected, and that will make the market also price in a Fed pivot, a BCE pivot, a pivot all around the world in central banks, right, in their monetary policy. So this would be really important if the US non-farm payrolls and also the US private payrolls, they come lower than expected, try longing the market. If they come higher than expected, then yeah, guys, we're going lower. That's it. That's basically it. This is the most important data. It is coming out in the next 9 minutes. We're seeing already the markets trying to go up here a little bit in S&P 500, right? But we're going to dive into it pretty soon. Okay, guys, we're going to take a look first at the DXY. We're seeing currently that the DXY is sitting at resistance right now, but we have support right here, which was previous resistance, previous support, which is 111.7 more or less. So we might have a small drop right here just to recover, and I don't think we're going to pump to the upside today, even though that is possible, right? I think we're going to consolidate here a little bit in the DXY and try to set up a bullish consolidation here for next week for DXY to pump. And how is this going to affect the risk on asset markets? So let's look at the S&P 500 levels, right? The data is coming out pretty soon, but let's not get ourselves caught into it. And let's go here to the S&P 500, right? So first of all, what we're seeing is that we're bouncing today from this previous resistance, which is currently support. We also have support down here at 3,680. So the support zones are basically 3,720. And if we break that zone, we're going to the 3,680, okay? If we manage to go higher right here because of the data that is about to come out, then we might have a break from these highs right here, which were really important highs, actually lows from the past that we can see here in July, basically, that set us up to a bullish momentum that we saw during July and August, basically. But yeah, we rejected from those levels. We're bouncing from this previous level right here, previous resistance, right now support. And if we see where is the next resistance after this break of this resistance, is just up here at $3,900, which has a high confluence with previous basically daily closes. So this is a really important daily close. If we manage to get a bullish momentum right here, we're gonna go up there, and this is a really important zone for shorts, right? Okay, now you're asking probably yourself, okay, how can I use this information actually to trade Bitcoin? Bitcoin is what interests me the most. I don't care about the traditional markets. Guys, you have to understand this is extremely important from the analytic standpoint to be made, right? In order for us to understand what is going on in the Bitcoin, in the crypto markets. So yeah, with this context in head, guys, S&P is trading just like Bitcoin, right? So we have not marked here yet. I'm gonna mark and I'm gonna be right back. Okay, guys, first of all, what we can see right here is that we're basically consolidating in this range, just as we said previously. We had a grab of liquidity from these highs right here previously, and right now we're trying to get up right to the 2250 again, like we did yesterday, basically. And basically we saw a lot of shorts coming into the market right here, getting liquidated right up there, and then Mr. Market Maker entering and making those shorts get out in a loss and basically pushing prices lower again. So let's see what is going to happen right here. It's going to be a crazy opening for the US session. Bitcoin is right now rejecting right here. Okay, it's rejecting really hard. Let's see if some news came out. They're about to come out. Volatility playing right here in the market, playing with the head of the investors right now. So this is really important to note, right? We saw a really big inflow right here of shorts. We can even pause. Okay, guys, the data came out. We're gonna see right now the movement of the market. I'm currently in shorts from the top there. Okay, market is trying to drop. We got liquidity here. We went up. We basically market orders entering the market. We see big chunks of selling orders right here entering the futures market in Binance, right? And is this a grab of liquidity? Let's see the data that came out. Yes, guys, so this is a short story actually, right? What we have seen here is the US unemployment rate coming lower than expected, right? So this means basically that inflation is coming pretty hard in the markets. This changes everything. This is a clear short, ladies and gentlemen. We have here the US, let me see here, the US private payrolls coming higher than expected. We can see here the non-farm payrolls coming higher than expected. Guys, this is a short. This is not a long. We can see here S&P 500 trying to break these lows right here, and it already broke 3,715. This is a short, guys. This is a short. This is going to be a story that you're going to tell everyone. I shorted this movement because guys, this is not a long. Even though we are at the lows right here, I'm still interested in a short, even though markets can play with liquidity a little bit, and we don't see that much liquidity. We only saw liquidity a little bit back then, and markets are right now retracing to the previous support level. I think this is still a short, guys. I really think this is still a short. But again, markets can play with the liquidity, right? They can come up here, grab liquidity again, and then pull down. But we have to see. S&P 500 still dropping right here. DXY going up, right? Trying to break this previous resistance right here. Let's see if it's a grab of liquidity. If DXY comes as a grab of liquidity, then we can see a pump in the risk on asset markets, right? But this doesn't seem to be what is going to happen. This invalidates the theory of a DXY trying to consolidate here a little bit more. So this is a short, guys. Be mindful of that. I just wanted to show you as well Matic, right? So let's see here Matic. Okay, guys, came back. Tried to short a little bit more the market. I'm trying to short here Matic because I basically, as you can see here in the 4 hourly, for example, for instance, is a lot of people were liquidated here from their longs, from their shorts as well. What we can see is a big inflow of red candles right here. So a lot of longs got liquidated right here. This is why we also got a pull to the upside right here, also because of Bitcoin. So the liquidity is mounting here up to the downside, right? I'm currently in shorts in Bitcoin, in Matic. I'm also holding currently a short in Ethereum. And yeah, I'm not saying for you to do the same, but obviously there is some confluency right here from the values, from what we're looking at, right? So what we can see here in the daily is a really bad perspective for Matic, right? So we are rejecting here from this big red zone that we have here, and if we would go to the upside, we would have a lot of resistance right here at 0.90 dollars more or less. One could say that we're at a bullish consolidation phase, and that this is actually a bullish pattern and all of that. But what we can see here in Matic is quite the opposite, right? So why is that? Guys, remember, if a movement has open interest, has a hike in open interest, it's a real movement. So what we have seen here is that a lot of whales were longing Matic, and we had a huge spike up in open interest, right? But then after that spike up happened, what we saw was a continuation of the spike up, but the price continued higher from this point right here from 16th of July, while the open interest started decreasing, right? And we basically were consolidating up here, and we're still consolidating up here. And of course, this can be bullish. This can go to the upside. This can go to the 0.90 US dollars. But what we're seeing right now is actually that a lot of whales entered long, and they already exited the market, right? They entered long right here again at these lows when there were liquidations of and when there were shortings entering here the market, as you can see, low shorts, but a lot of shorts here. If you count the total volume, a lot of shorts entering here the market, whales liquidating those shorts, as we can see from the liquidation bubbles, right? Let's see the actual liquidations. We cannot see the bubbles here, but we can see because of the of how sensible it is, the indicator, right? But what we can see here that from this spike up in open interest, we had a lot of liquidations from shorts, right? Which is pretty interesting. And we had a continuation of the liquidation of those same shorts, but it seems like shorts are not there anymore for them to be liquidated. So be really mindful that when shorts are not there, and when we have this kind of news that we had today, and we have this kind of bearish market structure in Bitcoin, this is a time to short those bad altcoins. And I'm not saying that Matic is a bad altcoin, guys. Listen up, Matic did pretty well. Matic is an amazing second layer solution for Ethereum, but in the moment, it will continue dropping just as Bitcoin, just as other currencies. And I'll say more, it will drop even further. That's my view. That's why I'm shorting currently Matic, and this is what I'm doing, right? So be careful here with the possible liquidity grab here, just for it to go to the downside again. Set your stop losses above this region of here of 0.95, and basically split your selling orders, right? Split your selling orders just as an institutional would do in your place, right? So thank you very much. If you enjoyed the video, just leave here a like and a comment, right? I would love to see that. I would love to see your comment, guys, and try to make a video also on your opinion, upon your opinion, right? So thank you very much. I'll see you in the next video. Bye bye. Have a nice trading day.